Hey all, welcome to ShareTreck. This is Raj here. And friends, as I promised, this is my video on BlueBird. And I'm going to lay out my thoughts, and I'm also going to show you some industry voices and their opinions about BlueBird. There's a little bit of optimism for BlueBird in some quarters, but mostly I think BlueBird has squandered its opportunity, and I don't think it is redeemable anymore. But let's go through the logical thought process. Let's get started. Welcome back, friends. I would like to talk about BlueBird Bio, and its shares sank around 41% as soon as the FDA news release came out that their SCD Lovocel SCD therapy was approved, but it came with a black box warning and a price label of 3.1 million when compared to 2.1 million for Casgevy without a black box warning. It was immediately apparent that that was a big disadvantage. And not only that, but also news is that BlueBird did not manage to get the priority review voucher it was expecting to sell at around $130 million. So they are kissing goodbye to $130 million, whereas CRISPR got $200 million milestone payment from Vertex on approval of Casgevy. So that's the qualitative difference between these two companies. One more difference is that CRISPR has got close to $2 billion in its cash in its balance sheet, whereas BlueBird was struggling before the approval of Lovocel. And at this point of time, I think it's in a worse position because it needs to generate more resources in order to market the Lovocel product, which has been approved. So those are the stark realities that I'm looking at, and I'm thinking that right now BlueBird Bio has become more of a speculative bet than something which is sound. So anything could happen with BlueBird. It could go for equity dilution, in which case if you buy the share now at 2.88, depending on how many more shares they issue, the share price could go down. Your holding would lose value. So what does a retail investor do? From my perspective, I'm staying away from BlueBird. I sold mine at a little bit of a loss yesterday after holding it for a long time, almost 6 months. But my position was very short, so I'm not going to lose sleep over it. Now let us see what the industry leaders are talking about. The first article here comes from Stat News, and here we have Adam Feuerstein, who is saying, after sickle cell screw-ups, BlueBird Bio's only option might be a company sale. I agree with him. The approval Friday of BlueBird Bio's gene therapy for sickle cell disease should have been a momentum-swinging achievement for the long-struggling biotech. Instead, the company mispriced this new drug and fumbled a pivotal financial lifeline. The consequences of this strategic blunder, arguably self-inflicted, could imperil BlueBird's independence, perhaps even its survival. So that's the first news that I am seeing here. The other one, the headline is BlueBird Bio faces challenges despite sickle cell therapy approval. And this is from Angela Hermantas in the Health, Medical Technology and Services magazine from Proactive. And I generally look at niche magazines which are focused on biotech, and they seem to have a much better understanding of the space. So here, what they are saying is BlueBird Bio may have secured FDA approval for sickle cell disease cell therapy, Lyfgenia, but market reaction has been mixed. Despite the FDA green light, BlueBird shares experienced a sell-off driven by concerns over pricing and label dynamics. So label dynamics is basically the black label. And this hasn't deterred analysts at Baird, however, who are maintaining an outperform rating with speculative risk suitability and a revised price target of $7, indicating potential upside. Though Blue sold off on the news, we believe the concerns surrounding pricing and label dynamics are overdone. And we continue to believe Lyfgenia will see uptake in a segment of patients. However, we have reduced our price target to $7 to reflect the risks surrounding near-term dilution and the potential of incremental commercial headwinds. So they are not looking at the company being taken over. They are looking at equity dilution, and despite the dilution, they are saying it's going to be $7. So price target of $7 after near-term dilution means this is a long-term price target. So I think investors can wait to buy buy the shares much cheaper, and then look for this $7 price target. That's my opinion. I'm not touching BlueBird despite this. Baird acknowledged market anxieties about LifeGenia's black box warning for hematologic malignancy, differentiating it from Casgevy, a similar product from Vertex. According to Baird, physicians, particularly those in academic centers, are unlikely to be swayed significantly as outcomes were influenced by a consistent preconditioning regimen. But the thing is, the consistent preconditioning regimen will be the same that will be used in real life as well. So what's the difference, right? Anyway, Baird analysts also highlight LifeGenia's longer durability data, potentially appealing to physicians and differentiating it positively in the market. One of the market's primary concerns has been the pricing delta between LifeGenia and Casgevy. The former is priced at $3.1 million compared to the latter's $2.2 million. Baird, however, emphasized the fungibility of pricing in biotech, noting that net prices, considering rebates, may make the two therapies more comparable than initially perceived. I agree to that, but still, if BlueBird is going to give discounts and sell it at around $2.1 million, then they have lost that much of revenue which they are projecting. So anyway, the balance sheet is not going to get the gain that they thought it would gain with 3.1, and they priced it at 3.1 because they wanted 3.1 million per dose in order to break even and stay viable. So I don't buy this argument either. You guys can give me your feedback in the comments, what you think about this argument. And they say both products are likely to secure coverage from commercial payers, leaving uncertainty about government plan reimbursement. That said, analysts highlight a substantial risk for BlueBird in the form of financing overhang. Prior to FDA approval, BlueBird had expected a priority review voucher that would have provided $103 million in non-dilutive financing. With the unexpected denial of PRV, Baird suggests BlueBird may need innovative financial strategies to extend its cash runway, currently projected into second quarter of 2024. So that's just 6 months away. Things are not looking great, my friends. Here is another article, the headline of which, this is from Fierce Pharma. This is again industry publication. It says, BlueBird sickle cell gene therapy comes with safety warning and higher price. Can LifeGenia overcome CRISPR's halo? And the story was updated on December 11 at 9:10 a.m. to include more information about BlueBird's commercial plans for LifeGenia and the response from analysts. So they are saying that alongside a historic approval from the first therapy utilizing the Nobel Prize-winning CRISPR-Cas9 gene editing technology, the FDA has cleared BlueBird Bio's rival gene therapy, that is LifeGenia, also for sickle cell disease, but a higher price tag, a black box warning, and the absence of a much needed cash infusion could usher in a tough time for BlueBird. Several analysts figured, despite the FDA early approval, BlueBird's stock price plunged 40% on Friday. BlueBird is pricing LifeGenia at a wholesale acquisition cost of $3.1 million and about 40% higher than the $2.2 million list price Vertex has placed on its CRISPR Therapeutics partner Casgevy. Previously, the US drug cost watchdog, the institute, that I had done a video on this, ICER, said that both therapies could be cost effective at 2.05. So I think CRISPR has come very close to the ballpark. So all the payers and even government agencies would find CRISPR more attractive. LifeGenia's price reflects its clinical value and the positive impact it has on the healthcare systems and on patients. BlueBird's commercial and operating officer Tom Kilmer said on a conference call Friday afternoon, but that doesn't explain the huge pricing gap between the two gene therapies that have shown very similar efficacy. Analysts from William Blair, RBC Markets, Jefferies, Cantor Fitzgerald, and Barclays said in separate notes to clients that the higher price may put BlueBird at a disadvantage in the upcoming market competition. Despite the list price difference, analysts at JP Morgan said they expect the two drugs' net prices after discounts to be similar for treatment centers. Guys, again, I'm saying that if the prices are similar, then BlueBird is losing money that it wanted to have. That's why they priced it at 3.1. So that's one thing. And also a bunch of analysts are negative on this. So overall, that's what is weighing down the share price. So that said, I think the black box warning is again a big deal. Limited cash runway is another thing. The FDA issued a rare disease priority review voucher accompanying the approval for Casgevy, but not for Lyfgenia. Companies can use these vouchers to expedite FDA's review of other drugs. So I think this piece of information is useful for CRISPR shareholders because CRISPR can use these for their CTX series of CAR T therapies, which they are trying to advance. And analysts at Cantor suspected that because BlueBird already got a PRV on Zynteglo, which is a twin therapy to Lyfgenia, the FDA may have viewed the request for a new PRV as double dipping. Before the approval, BlueBird had already agreed to sell a PRV to Novartis for $103 million. Now, without the expected cash infusion from the PRV deal, BlueBird only has cash to sustain the business until the second quarter of 2024. Now, here is a thought. If Novartis were to buy out BlueBird at a discount, then they would be able to afford to sell this therapy to patients at around 2.1 or 2.2 million, and with their cash that they have, the Novartis can actually market this much better and get a better outcome for all the therapies that BlueBird Bio has for that discounted price. Novartis might get Zynteglo, Skysona, as well as Lovocel, all of them. So we have to watch and see if Novartis decides to take over BlueBird, because they would be aware of BlueBird's situation. With two gene therapies on the market, BlueBird recorded 21.7 million in revenues during the first 9 months of 2023. By comparison, Vertex, known for its cystic fibrosis franchise, collected nearly 7.4 billion in product revenues during the same period. And this is the kind of dynamics that will apply if Novartis took over BlueBird. So I'm rooting for that. If that kind of a news comes in the market, I think BlueBird share price will jump, and we'll watch BlueBird closely. Right now, in my opinion, BlueBird continues to be speculative. Well, friends, I want you to have a look at this piece and let me know what you think in the comments. What you see here is Morgan Stanley lifts price target on CRISPR Therapeutics to $46 from $42, keeps underweight rating. And then immediately below that, yesterday, we had news from Truist Securities that they adjusted price target on CRISPR Therapeutics to 160 from 220 and maintaining buy rating. So Morgan Stanley is saying sell, Truist is saying buy. Morgan Stanley has a target of $46. Truist has a target of $160 for CRISPR, and Needham raises CRISPR Therapeutics price target to $88 from $85 and keeps buy rating. So as you can see there, people are all over the place. There is significant variation, which basically means that nobody has a good idea of what's happening. And all the investors in the market who are listening to these advisors are going to be in different places with respect to their expectations for returns and their risk-taking ability. So as a retail investor at this point of time with 100 shares of CRISPR, I am holding tight. I'm just going to close out my call position. I want your opinions. Do you think that the analysts which give these kind of prices and ratings are accurate most of the time? And what explains so much of variation? Please put it in the comment. So friends, that's the story of BlueBird for you. And if Novartis or some big company decided to take them over, it would be great. And I think all the therapies that BlueBird has developed, whether it is Zynteglo, Skysona, or Lovocel, all of them will have a better chance of competing in the market with deep pockets like Novartis. So here's hoping for the best. And again, BlueBird is, in my opinion, speculative, and there's a great chance, the chances of losing money on BlueBird is higher than gaining money, at least at this point of time. And if we look at the equity dilution taking place and enter after the equity dilution, that will be a better time, I think, to enter into BlueBird. This is my personal opinion, not financial advice. I'm not buying BlueBird at this point of time. I'm going to wait for the dilution to take place and reconsider my option based on more information that will be available at that time. Please put your thoughts in the comment section because it helps me also a lot. I'm just a retail investor like you, but with a YouTube channel. So it doesn't mean that I know everything. I'm also looking forward to the community to share their intelligence so that all of us can be better off. Thanks and have a great day. Bye for now.